us two to join, they will join us. I'm welcoming Dr. Famba. My colleague is here. Thank you, Dr. Famba, for joining us and the rest of the team. Okay, so today we are going to look on manufacturing accounts, but we are going to borrow some of the concepts, some of the key items from the previous lecture, from the previous lesson on the sole trade account, on the preparation of manufacturing, on the preparation of financial statements. So it means you are all expected to have a basic knowledge borrowed from the previous lesson. So you should heavily borrow from that, so that at least you can able to grasp this concept without problems. I've posted a slide. You see the slide there?
Yes, sir.
Okay, thank you. Because of network, sometimes I have to ask you. Want to look on the manufacturing account to understand that when you're manufacturing, usually the business buy raw materials for manufacturing. So when you buy raw materials, for example, when you are manufacturing, maybe you are manufacturing a soap industry, they might buy raw materials such as maybe oil or other perfumes needed, or other ingredients which are needed. So you buy raw materials and then you convert these into finished products which can be sold. So the idea here is that when you buy raw material, you incur costs. No one can donate you these raw materials every time, but usually you should purchase, should buy, you incur expenses. Then when you're converting, you incur a conversion cost. So the conversion cost, usually we're talking about the labor which is needed, the cost of the machinery, which is what producing. You need to service that machine, and those are some of the overheads. You need lighting. You need the water. You need the place to do it. So you need to pay rent. So all these costs are likely to be you incur those costs. So for example, here in the motor industry here, you find out that they should convert the raw materials so that they come up with a car. So they should come up the engines. There's a machining department, a fabrication department, an assembling department, so that they convert these raw materials into finished product. That is a car. Here again, you can find out that when they are producing an aeroplane again, they demand have what some of the materials usually which are expensive, so that they can come up with this. So that is very important for us when people are doing tailoring. Again, they want to convert the cloth which has been purchased into proper clothes, into proper attires. So they are converted into what, from raw materials, finished goods. So let's start by looking on the key elements course. The key elements course here, we have got direct materials. Direct materials, these are very important. These are cost of the materials used during the period. Those are direct materials. It's very important. So for you to manufacture a car, or to manufacture even a bicycle, you need raw materials, you need tires, you need wheels, and other raw materials. Even let's say you are a carpenter. For you as a carpenter, you need to buy planks, you need to buy screws, so that you can able to come up with a cable. So these are what called raw materials. So cost of the materials during the period, these are raw materials. So how do you measure it? The money measurement unit should come into place, because here we include the purchase price of the raw materials. How much have you purchased to bring those raw materials into use? How much have you paid to the suppliers? How much have you paid to the people who sell planks, so that at least you can able to costs related to the purchase. So we've got the acquisition cost related to the purchase, which is good. Sometimes you're talking about the carriage, what inwards. The cost of bringing that item, that asset, those raw materials is part of what? Of our assets. So of assets into use. So that the acquisition cost. Example, purchase of raw materials. When you purchase, for example, maybe you are in a manufacturing industry of manufacturing planks, you're a carpenter, you can purchase raw materials, then sometimes find out that for you to transport those planks maybe from Nyanga, Nyanga forestry to Harare, you need to pay for the transport fee, that the carriage inwards, freight charges on raw materials. The freight charges again, when you are transporting, you pay them. So our direct material, it consists of the purchase price, the amount which is paid to the supplier, and also the amount which you are going to pay to bring that asset to its location, or to bring to the location, or to bring the asset into a usable form. So those are consist of raw materials. So you should understand that raw materials does not only include the purchase price of the raw materials, but it also includes the acquisition cost, the cost which has been incurring by the entity to bring the raw materials into use. Then you go on to direct labor. Direct labor, for you as the carpenter to come up with the tables, you need for you as the owner of the carpentry shop to come up with the tables. What you need to do, you need to make sure that you employ carpenters who are going to do the job. We are going to do the carpentry work, so you pay them wages. So direct labor, including wages paid to people who are directly involved in the manufacturing process, who are directly involved in the manufacturing process. People who are actually doing the job, maybe they're in the assembly industry. Those people, maybe they are assembling the car parts of the car. Those people who are directly involved in the process, those that is direct labor. And those people who are not directly involved, such as the administrators and supervisors, they are not part of the direct labor. So example of direct labor are direct wages, factory wages, production wages, and manufacturing wages. These are the people who are directly involved in the manufacturing process of our goods. So that is what we call direct labor. Then we go on and look again on the next, that is our direct expenses. Direct expenses, they refer to the expenses paid according to each unit of production. Example, royalties. For example, you can use the name Coca-Cola or Pepsi. What happened that the Coca-Cola of Zimbabwe will pay a certain amount to the head office for using the royalties of the Coca-Cola. For royalties, sometimes they are using the ingredients which were supplied by the company, the mother company. In this case, maybe Coca-Cola from Switzerland or from USA, Pepsi from USA, then you pay a certain amount in terms of royalties. So those are the keywords. Those are We are talking about the direct material, direct labor, direct expenses. Then you go on to the next one. We've got factory overhead expenses. The factory overhead expenses are called, you can call them indirect what? Indirect costs. These are called sometimes indirect costs. Indirect costs, because they are not directly related or attributable to the production of goods and what and services. Costs incurred in the manufacturing process, but they cannot be traced directly to the goods being produced. That's called indirect what costs. So these are costs that incurred in the manufacturing process, but they cannot be traced directly to the goods being produced. Include indirect labor, indirect materials, indirect labor, and indirect expenses. Examples of indirect materials are lubricants, that is loose tools. They are not lubricants, maybe for oiling or maybe for making that the screws they can fit easily, or even if it is a vehicle, motor vehicle, we are trying to make sure that there is what there is reduce the friction. Then indirect labor. Indirect labor in this case, we are talking about the wages, salaries, bonus, or commission to cleaners, train drivers, foremen, supervisors, and production managers. These people are not directly involved in the manufacturing of goods and services. So we call them their indirect what labor, the wages of the supervisor, the wages of the production manager, the wages of the foreman, the wages of the crane drivers. All these, they are not directly involved in the production of goods, and they cannot be traced directly to the goods being produced at that particular time. That's why they are called, they are indirect what labor. Indirect expenses, again, we've got indirect expenses, the factory, machinery, and vehicle. This include rent and rent. You need to pay rent. If you don't pay rent, it becomes a what? A big problem. People are expected to pay rent. Sorry for a few minutes and to answer the call. Okay, sorry, welcome back. Indirect expenses, sorry for the stepping. Indirect expenses related to the factory, machinery, and vehicles. We're talking about the rent and rates. You need to pay rent where you are. You need to pay rates to the city council. You need to pay rates, for example, if to the people sometimes maybe are renting, you need to pay rates and rent. Depreciation, the machinery when it is manufacturing the products, when it's manufacturing those products, it's depreciate. That is the loss of what? Of value, wear and tear. Insurance, you need insurance to be insured in case of emergencies, such as fire outbreak, such as theft and any other incident which might happen. So you need insurance. Then you are talking about repairs and maintenance. Repairs and what? maintenance. In the repairs and maintenance, you find out that you need to do what? This need to be taken care of because the machinery might break down and need to be repaired and maintained so that it remain in form, so that it does not disturb the smooth production of goods and services. So the machinery should remain in maintained so that at least it won't disrupt the production of goods and services. Then we've got factory power. In a factory power, find out that you need electricity to run our systems. Though we might use our generators, sometimes it's very expensive, but you need what? Need electricity so that at least you can able to run our machineries, to run our production process. So we should pay for that. Then we need internal transport. For internal transport, we need to move from A to B. That is very critical. We need to move from one point to another point. Loss on disposal. If we lose, we dispose maybe during that particular period, we dispose the asset or the assets which are related usually to the factory. Maybe it's more, maybe you can dispose a certain department. Then if you put a loss, you incur a loss. That's what you call you incur. If it fails to make a profit, you incur what? A loss. Okay. Any query before we proceed?
Hey, tipinze hiyo.
Yes, you can continue.
Yes.
Can we continue? Do you have any
We
question?
Yes. Yes,
Yes,
continue.
you can ask.
Yes.
Or we continue.
Yes.
Or you're rushing to go and write the test. You did not write. Okay, let's continue. Then we go on to what to call production cost.
Yes.
So our production cost, it consists of prime cost. That is prime cost. That is the direct cost.
Supervisor at more.
Order. Order, please. Yes. Yes.
Chawanda divine.
Okay, we need to have order. I gave you time to talk and you were quiet. So if you want to talk, you can raise up your hand. Then I'll give you an opportunity to contribute because your contribution is very important to us. So I do hope with immediate effect, people, they will use the right channel to talk. If you want to talk your own, to have your own discussion, you're allowed, but you should make sure that you mute so that we don't hear your discussion, so that at least your discussion won't disturb the progress of this lesson. I thank you. Okay, let's talk about the prime cost here. So prime cost, production cost consists of prime cost. We said our prime costs or direct costs, they consist of direct material, direct labor, and direct expenses. That consists of our prime costs. Like what we're saying, say we're talking about direct material, DM. We're talking about again direct labor. We're talking about again direct expenses. Direct expenses. This can make our prime our prime cost. So this is very critical. Then we have got plus factory overhead expenses, like what we're saying here, to say we've got the factory overhead expenses. We go on to this slide when we talked about, to say, example, we've got indirect overhead expense, we've got lubricants, loose tools, indirect labor, and so on. These are factory overhead what expenses. We've got the related to the factory machinery of vehicles, because you use machinery to produce goods and services. Then you need vehicles to transport those goods. You need vehicles to transport maybe the raw materials. So this can form our indirect expenses. So that is our production cost. It's made of prime cost plus what? Fixed overhead expenses. So these are called, you can say, prime cost, they can be direct costs, and the fixed overhead expenses can be indirect costs. Then work in progress. It refers to the same finished goods which should be included in the cost of goods manufactured. Because work in progress, you might be the year end, maybe the year end at 31 December 2023, but find out that you might have some work remaining, some work which is not finished, some finished work, unfinished work. So that is work in progress. So we should not stop the production, but we continue with what? The production. So that is very important. Same finished goods which should be included in the cost of goods manufactured. So we take only the labor incurred by that particular time, plus the raw material. The raw material usually is in full, because it has already been what? It's been already inserted into the machinery. So we need to take care of that. Say some of the goods, we might close our books at the end of the year, but we've got the work in progress. We've got the goods which are still to be processed. Because some goods, they might not need only one day, they might need several days to complete a certain product. So because of that, what you give us some the work in progress. Okay, let's look on the manufacturing account. It shows the production cost or transfer price of goods completed during the accounting period. It shows the production cost or transfer price of goods completed during the accounting period. For example, we've got direct labor, we've got direct materials, as we are saying, direct expenses. All these three, that is what we call, they are called prime. This amount to prime what? Prime cost. Prime cost or direct expenses. Direct cost. Okay, then you've got fixed overhead expenses, work in progress, manufacturing, profit and loss. So we're going to find out to look on those aspects. How are we going preparing this manufacturing account? How are we preparing the profit and loss and so on? But what we are saying, because of that, before we do that, we need to make sure that we understand the key concept. Should able to ascertain, should able to pick the basic concept, identify what is a raw material and what is not a raw material. That is very critical. So here we are going to start on the trading account. This one is similar to the trading account, normal trading account, which we did last time when we were looking on the preparation of financial statements. We looked on the trading account. So the trading account here, we are saying it's just the similar format. But here, because we are talking about what the stock is inventory, the inventory which has been purchased and the inventory which has been transferred to the manufacturing, to the production. So that is what is very important for us to understand that. So this account shows the gross profit or a loss resulting from the trading of manufactured and other purchased goods. The account includes sales, what you have sold as usual, cost of goods sold. But in this case, our cost of goods sold consists of what? That's what I'm supposed to understand. Consists of the opening inventory, then then you've got manufactured goods and other goods. Here, profit and loss account, profit and loss of the whole business during the accounting period. So the trading account and profit loss account, they are different. For trading account, we are only talking about what one day gross what to call a gross profit. I'm only talking about the cost of goods what sold against the sales. Cost of goods sold consists of manufactured goods and other goods. Profit and loss of the whole business during the accounting period includes all the expenses. This includes all the expenses and income related to the office and the running of the whole business, such as gross profit loss from the trading account, the manufacturing what profit loss. Those we should have our manufacturing profit or loss. Then you have got administration expenses again. The directors, people um, who are the champions of the businesses, who are on the strategic positions, those administrations. Then selling and distribution expenses, then financial expenses, then exotic distribution of realized profit, net abnormal loss, cash misappropriated, losses of raw materials, and loss of finished goods. So if there is a normal loss, usually that normal loss, it can be what? Abnormal loss. Abnormal loss can be transferred to the profit and loss. Some expenses are related to both the manufacturing process and the administration of the office, such as rent and rates, electricity, insurance, depreciation on premises, motor vehicles, motor vehicles, and motor vehicle expenses. So those like expenses, they are such as rent and rates. To understand, they are classified under administration, such as administration of the office. So we need to understand those critical words. Then this expense allocated the factory and offices and debited to the manufacturing account and the loss account respectively. The base of allocation are usually given in exam questions. Sometimes can be given the basis of allocation to say 2/3 of the administration should be allocated of the heat and lightning. It will be allocated to factory or to a department. Like what we're doing on the departmental stores last semester. When we when we're looking about the departmental stores, you will see that to say cost can be allocated. This management can decide maybe on the usage or the floor space, depending on the management's what's criteria. So that becomes fair. Okay. Then any question before we move further? Any question before we move further? Any question? class, any question? Hello, any question before we move to the next, the critical part of our today's lesson?
Ndoda kubvunza pa-profit and loss account handina kunyatsonzwisisa.
Pa-profit and loss account? All right. Rega petsaita manufacturing account handiti ndobva uchazonzwisisa kuti neita sei.
All right.
Pachaita paformat yechaitai, then you understand. Papa, we're just looking on the basics, keywords, so that when you meet them on the format, you can understand what do they mean and how do we classify those costs. Like what I said, that the costs can be classified as direct or indirect. Let's look on the manufacturing account here. Here we are going to look on it's just a format. Okay, what you need to do, that is, you should look on the opening stock of raw materials. This manufacturing account, opening stock of raw material. In an opening stock of raw material, what you do, you just check on the it will be the closing day, closing stock for the previous period, then becomes our opening stock for this period. Opening stock, let's say your year ended the 31 December 2022, which means that this one becomes what the opening stock for the year 31 2023. Becomes the opening stock. Then you add the purchase of raw materials. So when you add the purchase of raw materials, then you add carriage inwards. Like what we do here, we say opening stock, add purchases, less closing stock. What we do in our usual sole trader trading account. Then after that, we looked on the closing stock of raw materials here. This is the stock of raw materials closing. So let's say this one is 1 January 2022, and this one, that is closing stock of raw materials, that is becomes here now we to send off and say that is 1 January. We want to say maybe it's 1 January. Let's say here 1 January 2022. On January 2022. Yeah. Okay. Then here we have got the purchase of raw materials. The amount, the purchase consideration, the amount which is paid to the suppliers during that particular period. then carriage inwards to bring those inventory into use. Then, like what we were saying, then the closing, here we've got now the closing what? The closing stock of raw materials. Let's say this would be 1 December and 31 December 2023. 2022, so here we list the closing stock of raw materials as at 31 December 2022. So if they are saying the opening inventory maybe for Chuma Limited is 2 million, then you what? Then you do the same. You use what? You can go and try to make sure that you understand that the opening stock is for when you are opening our books, closing stock when you are closing our books. Then you've got cost of raw materials consumed here, because this one, opening stock plus purchases plus carriage inward minus closing stock of raw materials, they will give you cost of raw materials consumed. So you should understand this format to say here you're supposed to have cost of raw materials consumed. That is what you only consume in that particular period. Then you go direct wages. This one is it doesn't have a closing what an opening stock. Then you go direct expenses. Let's say royalties. Again, this one does not what much labor. You don't have to suffer more on that. Okay. So then we go to factory overhead. Factory overhead here we've got direct wages. We've got loose tools, opening balance plus purchasing balance minus closing balance, that is X. Rent each may be 25%. Maybe they are saying the rent is paid or the 25% the value of the machinery. So you pay 25% to the value of what? 25% to the value of the machinery. Depending on the criteria already being paid as a fixed charge, one for all. Then the manager's salary, production manager's salary again. Then overhead expense, factory power, need electricity so that you can able to generate revenue, so that you can able to play what, so that you can able to run your business in a modern way whereby you need to invest into what energy. Then maintenance of plant and equipment. The equipment need to be maintained and the machinery also need to be maintained. That is very important. Then depreciation of plant and machinery. Again, depreciation of plant and machinery. Then you go on, then you add opening work in progress. Then you left closing work in progress. Then production cost of goods completed. The production costs and goods completed. That's very important. So any question before we go further on the manufacturing account? Because the idea here is for you to understand the key elements, the key words which are used, like what. That's why we started by what discussing to look deeply onto these key words. Any question on manufacturing account? Any question? Any question? Hello, class. Any question on manufacturing account? Hello? Class, any question? Any question on manufacturing account? Okay, if you don't have any question, let's go on to the next one. That is, we looked on the issue of trading account, like one of the previous speaker was asking about the trading account. Trading account here for the year ended 31 December. Sales, let's inwards. And so sales, we write sales, then let's return inwards. So you start by preparing the manufacturing account. Then after preparing the manufacturing account, then you go and this figure one it you are going to use it, the production cost of goods completed. Then cost of goods of sales, they've got opening stock of finished goods. We've got production cost of goods completed. We've got purchases of finished goods. We have got return outwards. Then we've got closing stock of finished goods. So we are going to pick the figure from. So you cannot prepare a trading account before you prepare the manufacturing account, because the figure of production cost for goods completed needed here. So what you need to do is to make sure that you prepare the what manufacturing account first. Then purchase of finished goods. So our opening stock of finished goods is going to be added production cost of goods completed, like the purchases of finished goods, less return outwards, less closing stock of finished goods. Okay. Yeah. Then we've got the gross profit. So we pick this figure like here from the manufacturing account, then that's the figure which we have here. So then opening stock of finished goods as we do in the normal what trade and profit loss account. Then less finished of what goods. Then return outwards was the returned what outwards. These are what are return onwards, inwards. Return inwards. When customer returning, you see what our sales. Those are sales returns. These are purchase returns. Okay, the other one who was asking question, if you answered.
Yes, sir.
Okay, if answered. So now we are supposed to do a trading account. So you don't start by preparing a trading account. You should start by preparing a manufacturing what account, because the answer we want the answer here for production cost of goods completed here. We want it here. That's why it's very important to what make sure that this is manufacturing. Then profit and loss account, gross profit here, agent revenues, discount received, expenses, carried outward, rent, discount allowed, administration expenses, tuition expenses, selling expenses, station of motor, then you get a net what? A net profit. Then you get a net profit. Any question? If you go to another stage, any question? Okay, on the next session, we'll do a practical example. On the next session, we'll do a practical example. So just take a rest, just a break for about 15 minutes. So at 9:55, we'll do a question. We'll start a question so that we insert those figures. We'll do a question. Okay. So don't log out unless if your data is so low, so that we'll finish off with we'll look on the practical questions from 5 to 10.
ndobvunza kuti zvamira sei hatina nguva.
Kose, how far?
Usingira kariba kaningiri karibira zoro mahari.
Ere.
Tumini zetu kufanya chini nasi.
Anamwita pause.
Hello, colleagues. Hello.
Machani araba.
Hello, sir.
Tia mbinga ita. Ana kuga ngire.
Okay, welcome back to this second session. Hello. Hello. Okay. Hello.
Hello, sir.
Hello.
Okay. Yeah. Where
It's a
are others?
joke.
Can you quickly join? Can you tell your friend to join now? I'll just
Kuvuga
give you
mambo
5
ndebi.
minutes.
Sema kutorera kura tichakunzwei.
Amtandinzwi.
Tukunzwai.
Maundinzwa.
Tukunzwai.
Imimi mukutaurira kure.
Hello. Amtandinzwi.
Tukunzwai se.
Maundinzwa.
Mati.
Hello.
Yes,
Hello,
let's
sir.
go. Tukunzwai se.
Mukutaurira kure.
Ndikutaurira kure.
Zvirukunzwika.
Andikunzwikwa.
Zvirukunzwika.
All right. I'll try to accommodate everyone. Let me try to find another mic that at least we can go together. Hey, well, come in.
Solution number one. But number one is Dipetone. Anzi ndezvechechi. Saka uno kuti kati iri kuzasi kwedu kunyepa uko. Solution. Koye baba guti na iwe dwe. Lupane number 11. Lupane. Shai. And ndina 15 yechituya yange iri 15 out of 1. Ndinotangiza. Eya zvarunotangiza uyayi.
Hello? Hello, class?
Yellow same.
Hello?
Yellow same.
Okay. I put a slide there. Are you seeing the exhibit 37.3? Hello? I'm sharing something with you. Are you seeing something? Okay.
Yes, sir.
Who can read 37.3? This is a comprehensive what? A comprehensive. It's a comprehensive example. Who can read for us? Jay Javi.
Hapasi kuoneka se.
I'm gonna anything.
Sede mabovuma pana chatiri kuona.
Hapana. Kana. I'm gonna anything.
Tikuona piki but mafigures are clear.
Muri kuona chi?
Mati muda kutengerwa papi?
Imi muri kutabata muri kuona.
Alright,
takuona.
Makuona.
Exhibit 7.3.
7.3. Javi sandis. All right, let me try to
Pinda books.
ikure. Let me try to make sure that it's large. Enter now. Oh. Now? How far?
Yeah, both.
Zvakuoneka.
Saka ndiyananga ativerengera. Hello?
Basket.
Ndiyananga ativerengera question.
Trial balance is at 31 December 20x7. Stock of raw materials 21,000. Stock of finished goods 38,000. Factory indirect 145,000. Royalties 7,000. Carriage inwards on raw materials 3,500. Purchases of raw materials 370,000. Productive machinery at cost 280,000. Same figures yakasiyana kaya. Say
Hello?
ko pane 280,000 iri mabrackets kozoita imwe iri kudebit side zviri kufamba sei?
Papi mimi. Chichiri kuitika. Inba ndiri kuona stock of raw material 1/1/2007 21,000. Stock of finished goods 1/1/2007 38,900. The wages direct 180. Factory 145. 145 plus 180 gives us 325. Are we seeing different slides? You add 145 plus 180, it comes 325 because they are direct wage and factory indirect. Yeah. Okay. This one. And 68, 180 plus 145 get 325.
Say indiri kutaura apo pakanzi productive machinery cost 280,000 and then ku debit side kwabva kwabuda pakanzi 230,000.
I'm only pane bracket. It means there is something wrong with this one. Adjustment.
Alright. Saka ndakuendera kumberi.
Enderai kumberi makasununguka.
Alright. Administration computers 12,000. General factory expenses 31,000. Lighting 7,500. Factory power 13,700. Administration salaries 44,000. Sales reps salaries 30,000. Commission on sales 11,500. Rent 12,000. Insurance 4,200. General expenses 13,400. Bank charges 2,300. Discount allowed 4,800. Carriage outwards 5,900. Sales 1 million. Debtors and creditors. Debtors we have got 142,300 and creditors of 64,000. Then bank 16,800. Cash 1.5. Drawings 60,000. Yeah. Drawings 60,000. Then capital 357,800. Then our balances were 1,421,800. Zvapera.
What's required?
Wapedza? Hauna kutumira toni? Yeah. Wasipaka wechipedzisa apapo.
Then notes at 31:12:20x7. 1. Stock of raw materials 24,000. Stock of finished goods 40,000. Work in progress 15,000. Then the second notes, lighting, rent and insurance are to be apportioned. Factory 5/6. Administration 1/6. Then the third one, depreciation on productive and administration computers at 10% per annum. On costs. Right?
Anzi, wateja wanapofanya fursa ya kitabu hasa tawa ikitaka kununua ndio kama Mungu lakini badala rangu pati na kuchuja watu wanataka na kununua kabili kwanza yangu watu wanajisikia kama nikataka kabili kabutukana tukana kupanga enda zibatu sasa ya kwa rai tukana na naji Odinga bashyira mu bintu by'amasambu y'abazakigenda muri zo nagari 2 days country bazikira isho for ije baje ko isoko bari mu makatete baza n'iki y'ibiki n'ishaka kukiresha kandi yabaye isumba mabati kintene ndumba mabondo kintene kana ro atandisiye kadira la senta chage kumabhegi kwekuti wondorora mari kuvanhu
Hello, colleagues. Hello. Hello, colleagues. Hello. Okay. Hello. Hello.
Yes, sir.
Okay, so let's go on to how I was supposed to answer this question. So the stock of raw materials one.
Yes, sir. Chifundwa.
Hello? Burundinzwa? Hello? 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 Hello?
Hello.
Murundinzwa ere?
Hello, sir.
Yes.
Hello, Murundinzwa?
Yes.
Okay, so let's continue. Our saying stock of raw materials at 1/1/2007. It is closing stock or opening stock. At the beginning of the year, it's opening what? Stock. Stock of finished goods 1/1. This is a what? An opening. Work in progress. That is this one. Then the stock of raw materials 24 at 31. So the 31/12, dates are very critical here. You need to be very careful with the dates. So here you need to look on the dates. So they are saying 31/12, and this is 1/1/2007. So this one, 31/12, which means these are closing what? Are closing figures. So you need to be very careful on this one. Make sure that you understand, you differentiate the opening figures and the closing figures. How do you identify them? We identify them through the dates. So this one are closing. This raw materials closing stock. Stock of which the goods is a closing. Work in progress is closing. So that you don't put the wrong what? The wrong figures. So we start by manufacturing account here. The manufacturing account is stock of raw materials that is opening at 1/1/2000. That is given. This figure is given here. No problem on this one, the given figure. Then you go on to the next, that is 8 purchases. The purchases here, purchase of raw materials. This 370,000. This is 370,000. 370,000. That is the purchase of raw materials. So it's opening stock 21,000. 8 purchases. That is 8 purchases here. That is our, when you're adding purchases, 370,000. Then if there is carriage inward on raw material, this is specifically, then you add again carriage inwards for raw materials. Then after that, then you less closing stock. The closing stock is 24,000. That is given here. Closing stock of raw materials is 24,000. Then after that, we get the cost of raw materials consumed. We get this figure. Cost of raw materials consumed here. Then I get this figure. Are we together on this section? That the stock of raw material, the opening that is given on the trial balance. Purchases given on the trial balance. Carriage inwards given on the trial balance. Less raw materials closing stock at 31/12. This is the closing what stock is given on the notes. So you read on the notes. Then cost of raw material, this one. Then direct labor. The direct labor is given. We are given our direct labor here. We are being told that there is when we come to our trial balance here, We have production, machinery, administration, computers, general factory expenses. Cost 280. Then we come here for our, by looking for the direct labor. Direct labor is 180,000. So you pick 180,000 so that you can come up with the prime cost. You don't pick 145. 145 is indirect. This one won't come under what? Prime cost. So the prime cost here, we write the direct labor 180,000 here. Then after 180,000, you go to royalties. As we had already said, the royalties are part of what? The royalties are part of the direct expenses. The royalties are part of the direct expenses. Then we add. Then we have got prime costs here. Because unless we have got other direct costs. So the prime costs here, we will say the cost of what? Raw materials consumed plus direct labor plus royalties. Then we get what? Prime costs. Then we go to indirect manufacturing costs. Manufacturing costs. If you are saying manufacturing costs, we are talking about only affecting the manufacturing what costs. General factory expenses. General factory expenses. General factory expenses. This one figure 31,000. You pick it and write it. Then you've got factory power. But here they are saying lightning, rent, insurance are to be apportioned. Factory 5/6, administration 1/6. So because of this clause, what do we mean? We are now saying for lightning, rent, insurance, factory will get 5/6, which means that for lighting here, the factory is going to have 5/6 of 7,500. For rent, the same thing, 5/6 of 12,000. Then for insurance, 5/6 of 4,200. That is what we are supposed to do. Then administration will get what? 1/6. Because here we should divide, we should disclose our expenses accordingly to the nature of here or the function. So here on this situation, because we want what? We want here they are saying administration production machinery costs 280, and then here is 280,000. Cost is 20, but here we recorded what? 230. So which means that we have got a problem of what? Of other elements which were not what? Which were not catered for. So that's why you find out general factory expenses that is given. Lighting, it's 5/6, like what I said. Power is not what going to be apportioned. So if it is not apportioned, which means that our factory power here, lightning and factory power here, they've got this one. Then administration salary, this is clear. Sales rep is not factory, commission is not factory, but rent, we get 5, rent insurance, we get 5/6. So this one is also included as part of the factory cost. That's why you find out that here we have got 5/6, then power is okay. Then the depreciation on productive and administration computers a 10% per annum on cost. On productive and administration, 10% per productive and administration 10% per annum. So there's depreciation here. The depreciation on productive and administrative computer. So we have got administrative computer and productive machine. So the cost here, one of my friends was saying, why here we've got a cost of 280 and here 230? What are they saying? The cost of purchasing this machinery was 280, but the value now is now 230. The value is now 230, maybe due to depreciation. The same as computer. The cost, it means it was purchased at 20,000, but now it's now 20,000. It's now 12,000. So which means that there was a depreciation. That's why these figures, they are what? They are not the same. They are not the same because the cost is the cost of buying. But now in our statement of financial position, we want the financial position, what is presented by the asset at that particular day, the current amount. So the current amount is 12,000. Here the current amount is 230,000, but the cost, it was purchased for 280,000. That is very critical here. Then these are the costs, the amount which we used, the amount which we paid when we bring the asset into use, according to the standard of IAS 16. That when you are going forward with your account, you'll see that say that was the cost of this. So but they are saying that depreciation is 10% per annum on cost. Per annum on cost. So it's 10% of 20. Yeah, that is 2,000. That's depreciation. 10% of 280,000. That's 28,000. So that's why we've got 28,000. 28,000 was derived from the 10% of 280,000 here. Because this is a productive machinery. We know that that is the factory what that's the manufacturing cost. Then we got the indirect labor. Indirect labor is given here 145,000. So you need to separate to know where to put the indirect and the direct labor. That's why here we have got 145 what 145,000 here. So this is indirect what? Indirect labor. Then here as usual, we add work in progress at the first, that is the work in progress. We look here at the beginning, that is 13,500. Then at the end is 15,000. So then the work in so here when we are coming here, we are going to say work in progress at the beginning, that is 13,500 here. Then work in progress at the end, that is the 15,000. Then we get the production of cost of goods completed. Here we have done with our manufacturing what account. So at this point, we would have done with our manufacturing what account. That is at this point. That is at this point. That is our manufacturing account here. So at this point, we have got manufacturing account here. That is the production cost completed, which should be transferred into the what the profit account. Then sales, we pick figures as they are. We are given sales here. The sales of 1,000. So you pick 1,000 here. That's the sales here of 1,000. That is the sales of 1,000 here. That is my sales. Then you go on less cost of goods sold. Stock of finished goods. Stock of finished goods. We pick here. That is a given figure. Stock of finished goods. It's a given figure. Then you add. Then after that, the stock of finished goods. Then add production cost of goods completed. we pick here. We pick here. This one, this figure is supposed to be transferred to here. This figure going to be transferred. Let me use another color here, the green color. So this figure, which you have calculated here, is going to be transferred here. Be very careful on this one. Need to be very careful. So step by step. So this figure is going to be transferred here. If she has calculated on the manufacturing account, it's transferred here. Then after that, we went on to get this figure 232,350. Stock of finished, this is given here. You pick here on the what? You pick on the, this is picked on the, this is picked again. You pick this figure on the additional information here. Then you have got your gross profit. So what you need to understand, after you prepared your manufacturing account, you should understand that production of goods completed at the end should be transferred to the what? To the profit account. That's why you find out that we have now this figure. Then administration expenses, administration salaries, that is 44,000. Rent 160, as I already said, say 560 is the what? 560 here is for factory. So here 1/6 of the remainder, which is 1/6 of the what? Of the given figure on the trial balance. So we go on the insurance. The same, that is 1/6 of the same amount. General expenses, that is okay, it's given, is for only administrative. It's okay. Lightning 1/6. Because administration for administration computers is clearly stated, is for administration computers. So 10% of this, because this was 10% per annum, 10% times 20,000, that is 10,000. 10 of 20,000, that is 2,000 here, because we get this figure after we have said 10% of 2,000. 10% of 2,000. That is here. Then selling and distribution expenses, you should understand what you should have the correct sales representative salaries 30,000 given, commission on sales 11,500 given, carriage outwards. A carriage outwards, it's a man, for example, when Lobels and bakers in, when they are transporting bread to the customers or when they are distributing bread, they incur carriage outwards. So this carriage outwards are part of selling and distribution expenses. You need to be very, very careful on this one. Then financial charges, these are bank charges, 2,300, discount allowed 4,800. Then at the end of the day, you get your profit. Then when you are going to the balance sheet, that's the statement of financial position. Production machinery, it cost was 280. But when it was 280,000 here, depreciation to date, because there's 10% per annum, here we have got 280 minus 230. So you are saying 10% of 280, then we get 28,000. So we say 230 minus 28,000. Because the cost, so we charge 10% at cost of 280,000. That is the 10% of 280,000. Then after that, we say 28,000. We subtract our our net book value, which is the carrying amount of 230 minus 28,000. That is our balance sheet here. Is the same thing what we are going to get if we say that cost for 78,000 was increased after we have said this figure of what we added. We were saying this one was 230, so we're saying the 230 which we have as our into 80 minus 230, that was what? That was 50. So the accumulated depreciation was 50,000. Then you say 50,000 plus 28 for the current year is what? 78. So we now have the accumulated depreciation of 78,000. That's why here we've got 78,000. That is the accumulated what? Depreciation. Because they've got what? 78,000 here. Computer, that is 20 minus 10. Here we've got accumulated depreciation in our computer system. The computer is a value of to check here 20 minus 12, which means that there was an accumulated depreciation of 8, that the current year is 2,000 on the profit and loss becomes 10. 20 minus 10, then we get what? 10,000. We get what? 10,000. So 20 minus 10 is what? 10. So this is what we are supposed to do. Then our current assets stock, here we take the closing inventory, the closing figures, that is what we take. So the closing inventory here, what you are going to do, if you come to your question, the closing inventory for raw materials, 24,000, stock finished, default work, these are all closing stock. Then you take bank, this adjustment is your asset. Cash is your asset. These are your assets. The drawings usually they less the what? They less the capital. They reduce the capital drawings. You are making drawings time after time to reduce your capital. So when you are coming here, that's why you find out that you have got 24, 40, 15. All our stock, our inventory consists of raw material, finished goods, and work in progress. You should take care of that. Then our debtors, this account receivables, they are part of it. Since there is no any adjustment of accounts of bad debts, so which means that we can take our debtors as they are 142,300, unless if there was any clause which say they need to be adjusted, then we adjust. Bank is given, cash is given, no problem. Current liabilities, creditors, they are given 64,000. Here they are clearly stated that debtors and creditors 142 and here 64,000. So these are clearly what stated. Then financed by capital balile. We wrote here, that which is given on the trial balance. The capital is given on the trial balance. Here on the credit side, this is the capital. But the capital can be reduced by what? By the drawings. The drawing, they reduce what? Our capital. That's the problem. Drawings reduce our capital. So you see that our capital is going to be reduced by drawings, but it's going also to be increased by profit. The profit which you are going to get here, 89,800, that is the one which you are going to add on the balance sheet here, 89,800. But our profit is going to be reduced by the drawings. Any question on that? Any question on this question? Any question on this question? Hello, class? Hello? Hello? Hello, class.
Yes, sir.
Any person? There are only
No.
two people. There are only two people left. Others, I think they are busy trying to write the test. Any person?
No, sir.
If you don't have any question, I'll share with you those who attended. I will share with them the recordings.
Okay, sir.
Okay, thank you so much.
Thank you.
You for the lesson. Have a good
Thank you.
day.
Same to you, sir.
Okay.